Mr. Dinesh Kumar Khara, India's biggest banker, and when he joins us, all the world takes a notice. And what a great way for us to start a year with none other than the chairman of SBI himself. Mr. Khara, good morning. Thank you for joining us. We managed to, sir, get you on camera. I hope it was not a late night for you, but it's been an early morning for you for sure.
Thank you very much, Nikunj. I'm an early morning riser, so that's no challenge.
So, should we start with New Year resolutions?
Yeah, New Year resolution is to continue to improve upon where we left the year 2023.
Sir, that's SBI New Year resolution. What about your New Year resolution?
Even my resolution is also in sync with what the SBI resolution is.
And you think that will happen in 2024? Because incrementally, Mr. Khara, with each passing quarter, SBI has managed to move from strength to strength.
Yeah, I do agree. And this will be our endeavor going forward too.
Mr. Khara, when you look at the demand versus credit growth, last time when we spoke to you, you were confident but conservative. What is your assessment of demand plus credit growth for FY24, for remaining part?
Well, I expect that the kind of a GDP growth numbers which we have seen in the first half of the current financial year, and if we add inflation component on that, so it works about to be about 12-13%. So normally we have been seeing that we are growing about 1 to 2% more than what the growth rate in the GDP is, nominal growth rate. So I expect that around 14-15% growth is something which we expect within the bank. So we are on track for that, and hopefully we'll get to see these growth numbers at the end of the financial year too.
You've managed to turn a difficult number, which is ROA. Sub 1% has now become a permanent 1% plus. 1.2 to 1.3 is what markets are expecting would be the new normal for SBI. Will markets get it right?
Hopefully, yes. We are, in fact, for last more than 3 quarters plus, we have shown actually it has been our last quarter we had seen 1.10. So I hope that we should be moving towards the trajectory of 1.20 as far as the ROA of the bank is concerned. There is a conscious effort, and all endeavors are in that direction, and hopefully we'll get to see those numbers also.
Mr. Khara, what messaging do you think we are getting from the regulator? Because the regulator now clearly seems to be sending a message that, okay, this is, you got to watch out when it comes to the unsecured loan. They are really looking at tightening that space. Do you think we need to be worried about unsecured loan as a category now?
I think the regulator was very clear in their mind when they have increased the RWAs for the unsecured loan. But while doing so, they were looking at the general trajectory in the unsecured loan space in the banking sector and also the NBFC sector. So, though at a macro level, perhaps the growth was too high for the unsecured loan piece. But when it comes to bank in particular, particularly State Bank of India, we had already calibrated our growth in the unsecured piece. And on the top of it, the quality of the unsecured in our case is much better. I would say that it's more like a gold standard, touch wood. And we hope to maintain this quality, and we don't envisage any challenge in as far as our unsecured book is concerned. But yes, of course, with the increased RWAs for unsecured loan as well as for lending to NBFCs, some of the NBFCs, there would be a situation where the cost of funds for such NBFCs will go up. But nevertheless, when it comes to housing finance companies, gold loan, etc., so those are the companies where it does not really go up. So they would be in a better position to avail the credit at the cheaper rates, and they will continue to fuel the growth of the real estate in the economy.
Mr. Khara, also another important move from the regulator is to increase the DA SIB capital requirement for SBI and HDFC Bank. In the light of the fact that they're important banks, how should one read into it?
Well, I think it is a step which has been taken overall by the regulator, considering the kind of risk which they are perceiving in the economy. And also, they would like to have the buffers created. So, with that in mind, it has been stipulated, but it is effective from 1st of April 25. That is what the prescription is. So I'm quite confident that with the kind of clawback which we have, we will be in a position to generate adequate clawback to take care of this increased capital requirements which have been prescribed by RBI. But we are very closely watching whatever is the situation, and we will be ensuring that the bank should be very well capitalized. It is already well capitalized, but it should stay well capitalized and meet all the regulatory requirements, because RBI prescription is one. Our board prescription is invariably over and above that. So we have been always adhering to the board prescription, and will stay well capitalized to take care of the regulatory concerns relating to some kind of risk which they are perceiving building up in the economy, and more so I would say it is more coming from the global economy point of view.
Mr. Khara, just to go back to that whole point on unsecured loan, you mentioned that there are no red flags for SBI when it comes to the quality of the loan. But would you be consciously looking at slowing down the unsecured loan?
Well, we earlier we were also growing fast, but now we are in the unsecured piece. We are growing at about 18% or so. So I think it is still doing well as compared to many other subsegments of the of our book. So I think we would be see the natural demand for the unsecured loan which is there in our book. We're in a position to meet out, which I expect to be somewhere around 18 to 20%.
When we spoke to you last time, Mr. Khara, you were of the view that new areas like EV, energy transition, renewables, these were the high growth areas for SBI. What is the update on that?
No, that continues to be the major focus area. The renewable continues to be the major focus area, and we continue to see the proposal coming in into this particular subsegment. And similarly, when it comes to EV, battery storage, data centers, and these are the areas where we are seeing good interest from various entrepreneurs, and we expect that we'll get to see a decent demand in this particular segment too. Even for that matter, logistics, warehousing, etc. There is a demand which is seen, and I would say that apart from the core infrastructure, where the initiative which was taken by Government of India is already yielding results. In addition to that, these are the other areas where we are seeing the demand, and I would say that some bit of a global supply chain balancing in terms of electronics and engineering goods also, we are seeing those capacities also getting added in the economy. So that's the broad picture which I would say as far as the corporate loan book is concerned.
Just to get the cycle right, Mr. Khara, your words are something which markets will take notice of. What you've guided for, sir, is the FY24 credit growth guidance. Now that is 3 months away. And now markets will start talking about FY24, 25 and 26. Do you see the current credit cycle sustaining for at least 3 to 5 years with very low NPAs?
See, this will be the function of how the real economy performs, and the kind of growth trajectory which is being talked about for the real economy. That is quite encouraging. And in the backdrop of the real economy growth, I perceive that it would be a decent opportunity for the banking system also to grow.
I think beyond FY24, the base effect would kick in and you would be slowing down. You don't see that happening.
If at all GDP grows at about 8% or so, then perhaps I would say that this would be the kind of growth which we should get to see. The kind of numbers which will be clocking this year, we expect the repeat of the same, but I mean, once we approach nearer to the actual time period, then perhaps we'll be having a better visibility.
And if I look at your numbers, assuming that you will grow at nominal GDP plus 1 to 2%, looks like for FY25 also your capital requirement would be zero. You'll not come to the market for next 18 months at least.
That's the ideal situation, but yes, of course, we'll be evaluating the scenario, and based upon that, we'll be taking appropriate calls.
Numbers here, sir. I mean, your last year's profit and projected profit, if you plow back that, and if I add back your credit growth, I think you don't need money for next 18 months at least.
That's the model which we want to practice, because ideally speaking, for a bank of this size, and also considering the profits which we're generating, that is the best source for us to capitalize the growth.
Khara, it's so heartening to see how PSU banks have made a comeback. And this is not once upon a time. 5-6 years ago, PSU banks were recapitalized. They were recapitalized at prices, not SBI, but other PSU banks at levels which were sub-book. And today, banks and PSU banks and some of your peers are actually going and raising money via the QIP route. What has changed, Mr. Khara? I mean, why things have really changed for the PSU sector per se, especially PSU banking sector?
Well, I think there are a couple of things. The PSU banks had always they had a balance sheet which was heavy in terms of the corporate loan book. And as far as the corporate loan book is concerned, the ecosystem changes which took place in terms of IBC, and also in terms of the responsible borrowing which we witnessed, and also ability to resolve some of the impaired assets. That is something which I believe has changed the perception about the PSU bank, and also has put in place the business models which are quite robust. So I would say that because if at all they have strengthened their risk quite a lot, risk management practices, underwriting standards. So if at all, a bank has got a loan book which is performing well, I think when it comes to the revenue stream, this is the most stable revenue stream which the banks have. If at all they are not required to provide for, perhaps this is the best of the situation. So I would say that what we have seen today is essentially a culmination of various efforts which were taken by the government, by the regulator, and by the banks also in terms of strengthening of their risk management practices. The net result of this combined effort is seen in the performance of the public sector banks today.
Mr. Khara, just when it appeared that interest rates globally and locally have topped out and things were looking up and the war for liability is over, SBI has actually increased deposit rates in some categories. Is it specifically to some category, or the war on liability is not over?
No. It is actually, we were looking at the interest rate curves. So when we looked at it, we thought that there is a need to smoothen the rate curve to spread the maturity profile of the deposit from the ALM perspective. And these are some of the areas where we felt that there's a need, and we did that.
The war of liability, which everyone spoke about, which was the story for 2022 and 23, that's over for the sector?
Sorry, I missed out your question.
The war of liability, sir, where
No, I think I would say that some of the banks have got very high credit deposit ratios. So for them, I'm sure they would be liability will continue to be a major focus. But yes, of course, the market has also witnessed, as Naren was rightly mentioning, that it's a time when people should look at asset allocation. So similarly, when it comes to liabilities in the banking system, there are alternate options which are available. And invariably, we have seen that when the markets do well, there is a natural attraction of investing into the markets to either through mutual fund or directly. But I would say that it is essentially the asset allocation, and that principle holds good. So that is one of the reasons why perhaps we have seen the kind of a situation as the liability, fight for liability was concerned. And apart from that, we have invariably seen that during inflationary conditions, there's a tendency on the part of the depositors to look for a asset class which can fetch them better. So that is the other reason which we cannot ignore. So these are the, I mean, one has to operate in the overall macro situation, and also, and I think in that the business practices will differ from scenario to scenario.
Mr. Khara, you've taken the internal productivity of SBI to a different level. ROA has gone up, credit growth has been fantastic, the lending mechanisms are really in place. But market share, SBI has always been between 20 to 25% market share, and that has happened in ordinary years. These are great years for SBI. What is your plan in place to gain SBI's market share? Gain from others, दूसरों से.
Well, I think we actually look at it from the perspective that we are looking for the risk which is in line with our risk appetite. So that is something which we always keep in mind. And with that, whatever opportunity is available, we'll certainly like to tap that opportunity and will grow. So, and similarly, when it comes to liability side also, we have we take advantage of our reach. We come out. We are focused on the customer experience, and we believe that our ability to offer a much better customer experience also helps us in gaining the mind share of the customers, which eventually helps us in having the market share too.
Mr. Khara, in this cycle, in this new credit cycle, do you see PSU banks doing much better than private banks, largely because they are lending aggressively in infrastructure, they are lending to build new India, and private banks have been very conservative. They're still focusing on their retail account, they're still focusing on HNI, they're still focusing on fee-based income?
Well, I think the economy offers opportunities in all the subsegments. So, but as I mentioned, that each of the bank will have to decide their own niche area or the risk appetite, and based upon that, they invariably build up the skill set also in line with the risk appetite. And once they have built up those kind of skill sets, they can exploit the market opportunities. So I think that is what the guiding principle would be. It will not be more in terms of I would say that it would be more ownership agnostic, either private or public. I mean, the kind of risk skill set which banks have built, and also the opportunities which will unfold, that will probably decide each of the banks' future trajectory in terms of the growth.
Sir, I distinctly remember when you took charge as SBI chairman, you had one mission, which is to clean up the NPAs and take ROAs higher. What is the next mission statement for Dinesh Kumar Khara?
I would say that we would like to maintain the gold standard of the asset quality in the bank, and will continue to focus on improving the customer experience, and also invest well in terms of the technology. We would also be exploring the possibilities of adoption of the generative AI, so that we can further improve the productivity of our bank and create value for all the stakeholders.
Your closing comments last time were that SBI was not getting ready for salsa, it was getting ready for tango. And it's a new year, dance parties are over now, but when will SBI do the tango?
I think we'll wait and watch.
But how do you see, sir, 2024 different from, let's say, 23 and 24 for SBI?
Well, I think in each subsequent year, we have only strengthened our position. So we have invested in terms of technology, and every subsequent year, we would like to reap the benefit of our investments into technology. And also that technology helps us in improving our operations too. So this is more of a journey. Year after year is a journey, and it's a journey for improvement.
Sir, a question on what IBA has agreed, a 17% wage hike in the latest meeting. What kind of impact that will have because of A, the legacy issue, and B, the new wage hike?
Well, wage hike, etc., is a reality in which all of us have to operate, and that's why it is always our effort and endeavor to keep on improving our earnings, so that we can easily address these kind of obligations which will be there, which is actually a reality for us. But as far as we are concerned, we had started providing for it from November 22 onwards. And whatever is a gap or the difference, we will be providing to take care of that. We are very well provided as far as our obligations relating to such wage hike is concerned.
Before we wrap, one of the most underappreciated number of SBI has been the attrition rate. I look at the balance sheet of some of your private peers, I'm not getting into names, the number is at 40-50%. For SBI, the number is very admirable. What is the number for SBI? I mean, we never talk about this number. We should talk about it more.
It's actually in the much lower single digit.
SBI attrition is actually single digit, and private banks have been 50 to 60%, if my numbers are right.
Yeah, we are just within about in the very low single digit numbers. So that is the kind of attrition, and normally we get to see the attrition only in the early stages when people join the bank, say in the initial 5 to 7 years time. And thereafter, once those who stay on, they actually start looking at the growth opportunities within the bank. And also, it's not merely vertical growth, but it is also horizontal growth too, because they get to have opportunities to work in all the sub-segments of the financial sector. And even in the banking, which is quite a complex area, they have got an opportunity to identify their area of interest and can develop into that. So we as a bank, we also invest quite a lot in terms of training our own employees. And we have 6 apex level training institute where the role is not merely, it is actually even ideation is also their role. Ideation and dissemination, both are their roles. So apart from the 6 level apex level institute, we have more than 50 learning centers across the country. So we have invested well in terms of our training capabilities, and which really help us well in terms of equipping our manpower.
Really appreciate your time. Best wishes for 2024, and thank you so very much for joining us.
Thank you very much, Nikunj. All the very best. May it be very happy, healthy, prosperous year for you and ETTV. Thank you.
Thank you very much, sir.